Good afternoon, everyone. This is Henry. As we get into tonight's video newsletter, I've got a couple of names for you that I think could see just a little bit lower in prices, and I think a lot of how you decide to trade this really comes down to the time frame that you are anchoring yourself to. In the case of Apple, I am currently of the opinion that the 3-day squeeze is still very bullish. But you've got to remember that 3 full days will unfold to create a single one of these candles. So there is so much that can unfold in a single candle, and it'll take a little while for the squeeze to really fire in earnest. To understand those multiple time frames is to show you now here on the daily chart where I think the stock very well could need 220. Right, so today we have closed below the 50-day simple. 221.69. You can see how just another $1.70 would take you right into this very critical strike. And this is where I don't know where we open up tomorrow, but if you open up with a very tiny bid, I think that would give way and flush you down into that strike. So it could present a very short-term bearish opportunity, and then from down in 220, if we can start to find some support, that's where I may look at setting bigger picture buys. But for this week, you've got a little bit of pressure, and Apple may need some of those lower strikes, and I see Amazon in a very similar way. So what we're looking at here is the anchored VWAP using the first trading day of the year. There's some unique influences here. Not only does that level show up about 175, but you also have your put wall at 175, and I find that those levels tend to be two things. First, they tend to be magnetic. So I think 175 needs to be tested, but then once tested, they tend to act as support. So again, I know this is just a little bit above it, but this is just showing you, let it have that another day or two of flushing. Get down into the 175, and then from there, you might entertain a short duration, put credit spread, or it might be time to start looking for more of a bullish ramp up into earnings. So those are two mega cap names and my view on them. I also wanted to bring you Netflix, where those first two I think have a little more downside to offer. Netflix is right at one of your more critical strikes. That is sitting at 700. And you'll notice that this week will not be impacted by the rising implied volatility you'll see out in next week. I think that opens you to the opportunity to do something like an iron fly, right? Where you're essentially selling the $700 straddle, selling the call, selling the put. Then you're coming out and buying protection, and over the course of the next 3 or 4 days, it's not going to trade perfectly sideways. There will be some up and down, but maybe Thursday afternoon, maybe Friday morning, you come back to settle right around 700. That helps you crush out some short-term weekly premium, and then we start thinking about trades into next week for the numbers. So I hope that provides a helpful view, gives you a few ideas as we head into the week ahead, and then of course next, the October expiration. More on that as we get there, but have a great rest of your night, and I hope to see you in the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.